Did you know that the United States office market is still evolving 5 years after the onset of the COVID-19 pandemic? This topic was recently explored in depth during the Business Journal's exclusive member-only webinar, where commercial real estate leaders from across the nation discussed the current state and future direction of the office sector. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. During the webinar, experts highlighted some key trends and challenges facing the office sector today. One of the striking points discussed was the national office vacancy rates, which have hit another record high. This is a significant concern as many distressed office loans remain unresolved, posing potential risks to the market. Despite these challenges, there's a sense of optimism among commercial real estate executives about the second half of 2025. This optimism is fueled by the belief that demand for trophy space, high-quality premium office spaces, will rise even as the new office pipeline shrinks. This trend indicates a shift in tenant preferences toward more prestigious and functional spaces. In the context of Kitchener-Waterloo, London, and Cambridge, Ontario, these trends are particularly relevant as we see similar dynamics in office space demand and vacancy rates. The emphasis on quality over quantity is becoming more pronounced, and this is a trend that resonates on both sides of the border. In the United States, markets like Charlotte are seeing new team entries, such as BankUnited's focus on corporate banking and commercial real estate, which could influence office space utilization. Ray Heard reports that recent retail transactions in San Diego indicate a robust market. Despite a slight increase in vacancy rates due to the bankruptcies of several national retail chains, the market is performing well. John Hickman of Newmark Merrill notes that San Diego outperforms many other markets in terms of occupancy and rent growth. Typically, shopping centers in the area are fully leased with high rental rates. Capstone Advisors, based in Carlsbad, has modernized its Mission Escondido shopping center to enhance competitiveness. The center, fully leased to 14 tenants including Dongbu Korean BBQ and Prism Jiu-Jitsu, underwent a significant renovation with upgrades such as a new roof, contemporary color schemes, and Tesla electric vehicle charging stations. Alex Zikakis, CEO and president of Capstone Advisors, emphasizes the importance of continuous investment in properties to maintain their appeal and avoid tenant loss. Brixton Capital from Solana Beach has acquired the Civic Center Plaza in San Marcos. This 60,000 square foot site is strategically located near California State University San Marcos City Hall, and Palomar College. Brixton Capital plans to target service-oriented food and beverage and health and wellness tenants to maintain the center's performance. Rob Taylor, President and Chief Investment Officer of Brixton Capital, highlights the long-term lease with LA Fitness as a key strength of the property. According to JLL, the availability of retail space in San Diego County increased to 6.8 million square feet in the first quarter of 2025. Although the vacancy rate reached its highest since 2021, it remains low at 4.8%. Brian Quinn of JLL points out that top-tier centers are attracting the most activity and achieving decent rents. The market is expected to tighten further as some retail sites are converted for other uses, primarily residential. Developers demolished more retail space than was newly constructed in the first quarter of 2025. John Hickman notes that the increase in vacancy rates is somewhat misleading, as much of the vacated space belonged to former big box stores, like Big Lots and Bed Bath & Beyond. Replacement tenants are available for well-located projects. Alex Zikakis remains optimistic about the future of the retail market, citing strong consumer demand in San Diego as a key factor for continued growth. Both Capstone Advisors and Brixton Capital express confidence in the long-term viability of the market. BankUnited Inc. has announced its strategic entry into the Charlotte, North Carolina market. The move is spearheaded by a trio of seasoned executives in corporate banking and commercial real estate, aiming to bolster BankUnited's presence in the southeastern United States. As a leading banking hub in the #1 state for business in 2025, Charlotte represents a significant opportunity for BankUnited to continue to grow, stated Thomas M. Cornish, the Chief Operating Officer of BankUnited. This expansion follows the bank's successful ventures in Atlanta, Dallas, and Morristown, New Jersey, highlighting its commitment to enhancing corporate banking and commercial real estate services across the Carolinas. Robert Hoke, a senior vice president and corporate banking team leader, will lead the charge in expanding BankUnited's corporate banking relationships throughout the Carolinas. Hoke joins from Woodforest National Bank in Charlotte, bringing 17 years of experience and a proven track record in defining and implementing growth strategies for businesses. His educational background includes a bachelor's degree from Davidson College in Davidson, North Carolina. Brian Moore, the Senior Vice President and Commercial Real Estate Relationship Manager, will spearhead the commercial real estate business. With a history of sourcing, funding, and managing over $2 billion in commercial real estate loans, Moore is expected to leverage his extensive experience and professional affiliations, including the Urban Land Institute and the International Council of Shopping Centers, to benefit businesses in the region. Moore is an alumnus of Washington and Lee University and holds an MBA from the Babcock Graduate School of Management at Wake Forest University. Joining them is Brand Hosford, Vice President and Senior Credit Products Officer, who will serve the credit needs of commercial and industrial clients throughout North Carolina. Hosford, with 24 years of experience, transitions from his role as Senior Portfolio Manager at Woodforest National Bank. His academic credentials include an MBA from the University of Michigan and a bachelor's degree from Brigham Young University. BankUnited, N.A., one of the largest independent depository institutions headquartered in Florida, operates across several key locations, including Florida, New York, Dallas, Atlanta, and now Charlotte. The bank offers a comprehensive range of consumer and commercial banking products and services catering to individuals, small businesses, middle-market companies, and large corporations. With total assets of $34.8 billion as of March 31, 2025, BankUnited continues to extend its footprint, offering national platforms for commercial lending and deposit products. Starwood Property Trust has announced a strategic move to diversify beyond commercial real estate lending by agreeing to acquire fundamental income properties for $2.2 billion. This acquisition marks a significant step for Starwood as it expands its portfolio and influence in the real estate sector. The purchase reflects the company's strategy to broaden its investment horizons and capitalize on the growing demand for net lease properties. According to CoStar News, Fundamental Income Properties owns a variety of assets, including a notable building in Fredonia, Wisconsin. This acquisition will allow Starwood Property Trust to strengthen its position in the net lease market, which is increasingly appealing due to its stable and predictable income streams. Net lease properties typically have long-term leases with tenants responsible for most of the property's operating expenses, making them an attractive investment option. This move by Starwood Property Trust is part of a broader trend among real estate investment firms seeking to diversify their portfolios. By investing in net lease properties, Starwood aims to reduce its reliance on traditional commercial real estate lending and tap into new revenue streams. This strategy not only mitigates risk, but also positions the company to leverage potential growth opportunities in the net lease sector. The acquisition of fundamental income properties aligns with Starwood's long-term vision of expanding its asset base and enhancing shareholder value. With this purchase, Starwood is poised to capture a larger share of the net lease market, which continues to gain traction among investors looking for stable returns. As the real estate market evolves, companies like Starwood Property Trust are adapting their strategies to meet changing market conditions and investor expectations. The acquisition of fundamental income properties underscores the importance of diversification in today's competitive real estate landscape, where firms must continuously seek innovative ways to grow and remain relevant. In our latest episode, we delve into Beyond Gut Feel, the power of data analytics in modern commercial real estate investing, featuring insights from Ryan Severino, the chief economist and head of research at BGO. In this episode, Severino explores how data science is revolutionizing commercial real estate investing. Ryan Severino discusses the ways in which data analytics are transforming investment strategies, from surpassing rent growth expectations in Las Vegas to utilizing machine learning to forecast macroeconomic trends. His insights underscore the importance of integrating traditional real estate knowledge with cutting-edge analytics. The episode highlights key moments, such as Severino's team's approach to economic modeling and the application of data science in real estate forecasting. He shares how research impacts investment decisions and addresses the challenges in aligning research with investments. Severino also touches on the current macroeconomic environment and offers predictions for the commercial real estate market in 2025. He discusses an augmented base case model for the United States economy and the state of commercial real estate markets. The episode concludes with Severino's thoughts on teaching and mentoring the next generation of commercial real estate professionals, emphasizing the value of data-driven decision-making in today's industry landscape. As commercial real estate continues to evolve, understanding and leveraging data analytics becomes increasingly vital for investors. This episode provides valuable insights for professionals navigating the data-driven commercial real estate environment. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.